Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful.
Just to recap there, GDP quarter-over-quarter advance coming in above expectations at 2.4% on the expected.
I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I'm sorry I am super late. I'm not feeling very good today, and when that happens, I don't get ready as quickly as I should. But we just had U.S. initial jobless claims and GDP quarter-over-quarter advance, and the GDP came in at 2.4% versus an expected 1.8%, and so that is just absolutely killing the treasuries here. Some of my data is still loading, so I may need to restart my platform here. But it looks like rates are going back to 3.9, so I'm surprised the micros here are relatively liquid. Yeah, I'm gonna kill Ninja Trader here. I don't know why it's being weird this morning, but did you hear all of those beeps? Yeah, when I decided to end task to it, it was like all of the windows all of a sudden were like, "Oh, I have an error," and it showed them up to me, and then it fell over. Okay, that looks a little bit more promising. At least all the windows are loading now. It wants me to roll over golds. Okay. You have to exceed. I'm like having like heartburn this morning or something. I don't know what the deal is. It's just like my chest and my stomach burns, you know? Well, I'd be really surprised if we don't see 3.9 after that. It's so close. Okay, there we go. It loaded the data for Zian. Wife roughed it with that last night. What? I don't know what causes this. So, sometimes it's like sometimes you make too much acid, and then when I take my one of my medications in the morning, it like really gets like, and then like if I'm just me drinking water or eating food is like feels like fire. And then on top of that, for some reason my traps are all sore this morning. Why would my traps be sore? It's not like the whole trap, but it's I think it's definitely the trap muscle. It's not so much up here, but like down in here. And I don't know. Yesterday I did like flex them really hard, but like that wouldn't cause me to get DOMs. I don't know. Yeah, well, I wonder, you know, I always thought that it was like you're inconsistent with your eating. Like you don't eat at the same time, or you eat too much relative, you know, and your body's expecting a certain amount and then it makes too much or something like that, right? I don't know what the deal is, but yeah, so I'm not feeling super great. Okay, so let's see here. We should be getting ECB press conference, right? Oh, okay. That doesn't start until 6:45. I don't know, man. That GDP. That GDP is not necessarily what you want to see right now, right? I mean, I think I'm feeling a little bit better now that I've gotten some food in me, but still. And then the thing is, usually after this, then I'm like really gassy the rest of the day. Well, the Treasury's backed off there. They didn't touch 3.9. Seeing there's a big step up buyer in the 5-year. Well, there is some of these big orders out there, but I don't know if 1,000 is that unusual for ZF. Right here on Sim, since I'm not feeling very good, I really don't think I should take it live, but I'm gonna mess around with this in Sim a little bit. Oil spiked on this too and hitting $80 a barrel. We had this issue where opening Jigsaw with Ninja, the data. So are you using like the plugin version of Jigsaw? That's kind of weird. But it also sounds like a possible template issue. So like I have had from time to time issues with Jigsaw where like the templates get all screwed up. Since I have a full-time license on Ninja. No. So what you should be doing is this. Use the bridge. So you download the Jigsaw standalone version and it will install and plug in into NinjaTrader. And then you add that plugin onto like a market analyzer, and it will then forward the data to your Jigsaw. You're using that. Okay. But don't use the one where it's like you're not using standalone Jigsaw. Because the old plugin version of Jigsaw is basically they don't update anymore. So you don't want to use that version. Okay, so if you're doing that, then the next thing that I would do is like start a new workspace in Jigsaw. Like delete all your DOMs, like close all your DOMs, start a new, you come over to here, file, new, and just like change the workspace to something completely different, right? And possibly even like reset your templates, because what can happen is maybe there was a bug on a random version. Oh wow, that happened a little quickly. Okay. Maybe there was a bug in a random version and it was saving the XML incorrectly, and so then when it tries to load the DOM up, it's loading up that error, essentially. Dude, that trade like worked out so perfectly. You have to pay for the okay, so I'm not quite sure I understand your question. But so first of all, there's Jigsaw can connect directly. I think it can connect directly to interactive brokers. But there's also like a plugin thing, right? And that is just a thing included with Jigsaw, right? Now, the thing that you have to pay for with Jigsaw is the live trading license. So if you want to actually like click and enter orders on the DOM, that you have to have the license for. If you don't execute in here, like you do your own platform, like you use Ninja Traders tools to submit orders, or you use interactive brokers tools to enter your orders, or you're trading sim accounts, then you don't have to pay the monthly live trade license fee. But I'm not sure the details of the compatibility with interactive brokers. I do think they have it though. Let me see here. Maybe not. Oh no, IBTWS is what I think it is, right? Wow, it come all the way back that quickly, huh? Durable goods orders in June saw the biggest monthly spike in 3 years due to a massive jump in non-defense aircraft orders. Huh. Okay. They did fill me again there. Yeah, no, the live trade license is specifically for placing live orders on the DOM. And Jigsaw doesn't deal with the data fees, right? That's with the broker. Like usually your data fees are just taken out of your brokerage account, right? Well, they pushed a little bit through there. I'm feeling a little nervous about this. it was live, I would definitely be nervous. I don't know about that last trade. Like, I could have gotten $10 on it, but like with the amount of volatility that there is in here, I don't know if that's actually really a good win. Do prop accounts? I think that you need the live trade license for the prop account, right? I don't remember. It's been like 5 years. You know, I'm feeling a little bit better about the trading community overall, because over the last, let's say, 3 months, it seems like I hear a lot less about prop accounts, prop firms. Wow, that's how long? Well, so I got interested in markets and trading after 2008, but I didn't start actively trading futures until 2016, 2017. So I'd say there was kind of this interim period in 2016 where I traded a bunch of other random things. So by the time I started streaming, it had been about a year. But I just count that like when we started the YouTube channel is when I started trading, is kind of where I set the point at. And it's a weird thing. Oh, I'm hearing Liliquard now. I'll pull them up as I'm talking about that. So like, you know, at this point, I guess I'm considered an expert, right? I don't really feel like I should necessarily be considered an expert, just because I think that, like, you know, expertise should be gatekept very, very aggressively. And I'm constantly seeing people on TikTok where they're like giving advice, especially all these kids that are giving life advice. And I'm like, honey, you are 22. You don't know squat about marriage and kids yet, okay? You don't know anything. But they're always on TikTok giving this advice, right? So here I am. I'm giving advice and training. Well, I've been doing it for a couple of years now, right? And that's the thing, is that because of the way that our industry works, I end up being an expert when really you normally shouldn't be, you know? Like, I've been doing it for, most people, they don't last 5 years. I've been doing it for like 7 years now, right? And the guys here in the channel, like guys like Lucas, for instance, Octavius, they've been here for years and years and years, right? Our community has a very high number of traders that have been around for a long time, which I think really speaks to the quality of our community, right? And then on top of that, there's like all of this research and stuff that like the retail traders just like never look up. So like the real experts should really be people like Jean-Philippe Bugeaud, for instance, right? Researcher co-founded Capital Fund Management, which is basically the most successful player in our space, the CTA space. That's the expert. But the thing is that they can't really have YouTube channels and Twitter accounts and stuff like that. Like, you're restricted on what you can do if you're in the industry, right? And so the burden, I guess you could call it, of, you know, being the expert in the space for the retail traders falls to people like me. And I think it's kind of weird. 22 been trading since I'm 10. There you go. Okay, ECB. Oh, I forget what their channel is. Can't just type it out. European Central Bank.
Outline in more detail how we see the economy and inflation developing and will then explain our assessment of financial and monetary conditions.
Oh, if I get this filled up, that's going to be in a good spot. Oh, yeah.
The near-term economic outlook for the euro area has deteriorated, owing largely to weaker domestic demand. High inflation and tighter financing conditions are dampening spending.
Gold tanking hard.
On manufacturing output,
Oh, wow, you're right.
held down by weak external demand. Housing and
Oh, because the dollar.
are showing signs of
see.
weakness as well.
Hmm.
Services remain more resilient, especially in contact-intensive subsectors such as
So then what's going on is European yields are falling.
the economy is expected
U.S. yields are rising because of GDP.
inflation
And the result is a very strong dollar at the moment and gold tanking.
should support the recovery.
Yeah, deteriorated is not a good thing to hear.
Labor market
I'm a little surprised to be hearing
the
what she's saying right now.
stayed at its historical low of 6.5
So you obviously trade. No, don't trade full time. Don't trade full time, folks. It's not.
created
It's not what it's cracked out to be.
in the services sector. At the same time,
Don't trade full time futures at least.
trend might slow down in the coming months and may turn negative for manufacturing. As the energy crisis fades, governments should roll back the related support measures promptly and in a concerted manner. This is essential to avoid driving up medium-term inflationary pressures, which would otherwise call for a stronger monetary policy response. We welcome the recent Eurogroup statement on the euro area fiscal stance, which is consistent with this assessment. Fiscal
Are
policies
you going to go for more now?
to make our economy more productive and to gradually bring down high public debt. Policies to enhance the euro area's supply capacity can help reduce price pressures in the medium term while supporting the green transition, which is also being furthered by the Next Generation EU programme. The reform of the EU's economic governance framework should be concluded before the end of this year. Let's look at inflation. Inflation came down further in June,
There it goes.
5.5%
You going to touch it? Okay.
after
There you go.
6.1% in May. Energy prices fell again, dropping by 5.6% year on year.
I'm still thinking if I had taken that on Sim that it's a little bit too volatile.
High at
But-
11.6%.
Sorry if did I say Sim? If I had taken that live, I think it's a little bit too volatile for me to be taking something like that live. But I would be up $30 now if I had done it.
With goods and services following
Would
divergent.
have come all the way back to my entry though.
Goods inflation decreased further.
It would have been a difficult one to hold.
From 5.8%.
This was difficult to hold.
Conversely,
Except for that I had multiple contracts, so
rose to 5.4% from 5% in May, owing to robust spending on holidays and travel, and also reflecting upward base effects. The
how far is this going to go?
are changing. External sources of inflation are easing. By contrast, domestic price pressures
So yesterday's low was this 21 right here.
and still robust profit margins are becoming an increasingly important driver of inflation. While some measures are moving lower,
So if they bust through that,
high overall, including owing to the persistent
we might have a meta order. Well,
energy price increases on economy-wide prices.
so in this situation, you definitely have like meta orders,
And at a
but we're also in a situation where the market is a little bit unhinged, right?
need to be monitored closely.
Because of the news and ECB and everything
Our
else.
risk assessment
This is a really
for economic growth and
volatile situation, isn't it?
remains highly uncertain. Downside risks to growth include Russia's unjustified war against Ukraine,
I'm quite taken back by it because when I woke up this morning and I started thinking about, okay, what we had ahead of us, And I was thinking, well, we do have some economic news, but I don't know if that will be too important. And then we got ECB, so today might be like a quiet day, or might be a difficult day. And then the GDP was like super crazy, and the ECB is like, concerned about economic weakness. It's just like the perfect storm, isn't it?
The strong labor market, real incomes, and receding uncertainty mean that people and business become more confident and decide to spend more.
There's the dollar kind of bouncing off of 101 for a bit.
Inflation include potential renewed upward pressures on the costs of energy and food, also related to Russia's...
Hedge still hasn't posted a story about the GDP number.
Adverse weather conditions, in light of the unfolding climate crisis, may push up food prices by more than projected. A lasting rise in inflation expectations above our target, or higher than anticipated increases in wages or profit margins, could also drive inflation higher, including over the medium term. By contrast, weaker demand, for example owing to a stronger transmission of monetary policy, would lead to lower price pressures, especially over the medium term. Moreover, inflation would come down faster if declining energy prices and lower food price increases were to pass through to the prices of other goods and services more quickly than currently anticipated.
Yeah, well, I'm thinking about taking it off.
Financial and monetary conditions. Our monetary policy tightening continues to be
kind of trying to watch this inside here.
Financing conditions. Risk-free interest rates over short to medium-term maturities have increased since our last meeting, and funding has become more expensive for banks. In part,
the issue is 8,000 is a decent amount, but it doesn't like super surprise me. And the thing that's I'm kind of holding out for is if they break yesterday's low.
Lending rates for business loans.
So I think that the situation is such that we could absolutely do that, right?
And 3.6% respectively. Higher borrowing rates and the associated cuts in spending plans led to a further sharp drop in credit demand in the second quarter, as reported in our latest bank lending survey. Moreover, credit standards for loans to firms and households tightened further, as banks are becoming more concerned about the risks faced by their customers and are less willing to bear these risks. Tighter financing conditions are also making housing less affordable and less attractive as an investment, and demand for mortgages has dropped for the fifth quarter in a row. Against this background,
Uzi.
the annual growth rate of...
It totally fits in with what they would, sort of language they would use, huh?
For firms and 1.7% for households, with annualized growth rates of 0% and minus 0.2% in the second quarter, respectively.
Okay.
Amid weak lending,
So I think what I'm going to do here
in the Eurosystem balance sheet
is take this one
growth rate of broad money
and try and reload back on a little higher.
in June, with an annualized growth rate of minus 1.1%.
Starting around 25.
To conclude, inflation continues to decline, but is still expected to remain too high for too long.
Oh, look at that. Maybe I spoke too soon.
For today decided to raise the three ECB interest rates by 25 basis points.
Okay, so there's still a chance for them to dip below that, but what I just saw there would probably be an even better signal for me to get out, right?
For as long as necessary to achieve a timely return of inflation to our 2% medium-term target. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial.
You get this thing where, you know, there's always more market orders that can come in. So I'm not going to say that like it's likely to pull back or anything like that. But we did see a bunch of volume trading in there. So I can see the dynamics in terms of the liquidity are kind of preventing it from going much lower. So it might need to kind of pull back and rebalance a little bit before they can make another push. Unless, you know, that flood of new orders comes.
2 questions as always. Does the absence of guidance for September, I assume you expected such a question, mean the Governing Council is equally open to another hike, to a pause, or even to the conclusion that rates have already reached their peak? That would be the first. And the second one, I'm wondering...
well, we did get a little bit of a pullback, so I think that was a good read.
Lowering the remuneration of minimum reserves has been, or how much...
I think the wealth talk was a little bit early, but I think that was a good read.
Thank you.
Thank you very much for your 2 questions. You know what, let me just remind you what we have been doing. And I'll come to your interest, which is what happens next. But let me just
remind
you what we're doing and what we have been doing. We are raising interest rates, all 3 rates, by 25 basis points. And this is the 9th decision to hike.
I got to put that in Liquard's greatest hits.
So invariably, one meeting after the other, we have raised rates. The DFR is now at 375. And this decision that was unanimously agreed amongst all members of the Governing Council is driven by one key determination, which is to bring inflation to target. Our target, which is medium-term inflation. There is unanimous determination to do so. What have we decided as well? And I'll come to your minimum remuneration because that was your second question. We have also decided, and I'm going to quote because it's a sentence that you might hear over and over, not this time, next time, and future times. We say, our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation.
Okay, that went a little further than I thought.
Medium-term target. So some of you may have noticed a slight change of a verb. And that is not just random or irrelevant. And I think it's predicated on our determination to be data dependent. So I have
they reverted back to this point of control area.
To cover. What I'm saying here is that data and our assessment of data will actually tell us whether and how much ground we have to cover. So we are deliberately data dependent, and we have an open mind as to what the decisions will be in September and in subsequent meetings, because this determination based on data might vary from one month to the other. So we might hike and we might hold. And what is decided in September is not definitive. It may vary from one meeting to the other. So I hope it's very clear that...
I feel like she's getting a little bit too comfortable talking in these meetings.
In the domain of forward guidance. But we are very...
She became a guru. It is
rooted in our determination to break the back of inflation and to take inflation back to...
Like, she feels far less restrained than she was like a year ago, doesn't she?
Informed by data.
I mean, she's always kind of said, you know, things in a funny way, and kind of, I mean, she's a fun communicator. She's a good communicator. She really is. But
with all
But today I really feel like
section and understanding of it, and we will have even more understanding of our monetary policy transmission. And that will be repeated every governing council after every governing.
well, so size stops markets, volume stops markets. Yeah,
we break the
I mean it's a complicated thing, right? Because
our primary
often the strongest trends, you're going to see a lot of volume absorbing against it, and it just doesn't stop. And the issue that you will see is that you could have a large meta order that's being executed here in the treasuries that's like 100,000 contracts, right? And if you have that much, it's not going to stop all day, right? Whoa.
We will reduce the amount of interest that we pay, which
So the numbers that I'm seeing here aren't like
more efficient.
too excessive.
At the same time, it is going to have no impact on our policy stance. Which
And the bigger issue is you're kind of in a situation where,
excess
you know, those market orders can just appear out of nowhere.
than the minimum reserves. So that's the decision that we made. More efficiency, and that's also, of course, predicated on the principle of proportion.
So I think in that situation, because we had a little ledge and then we had the stop run lower, right?
I have a question.
You start getting the absorption down here again. There's a good chance that you're going to get a bounce. It would have been really hard for them to have pushed through that and pushed lower. But I just don't want people to get the idea that, oh, okay, when I see about $10,000 or $13,000 traded at aip and that's like going to be a pullback, right? That's a dangerous trade.
To know whether you have discussed accelerating the shrinking of your balance sheet, and if not, whether this could be a topic for the so-called second half of the year. Thank you.
And we should realize that given the situation that it's entirely possible today could be a trend day. Like they might
We have not discussed,
kind of mean revert here for a little bit, but this is possibly a trend day.
obviously acknowledged that the balance sheet has reduced. And it has reduced as a result of, number one, the reimbursement of more than what was expected to be reimbursed under the TLTRO reimbursement in June, and also by the fact that we have not only stopped net asset purchases, but we have stopped any reinvestment. So the balance sheet of the ECB is reducing as a result of that, but we have not discussed any further reduction at this point. On your other question, as you know, transmission of monetary policy is one of the three metrics that we use in order to determine our monetary policy stance, the strength of monetary policy transmission. And we look at it that...
Oh, so I was like, there's something I'm going to do, something to respond to, and I was looking around for it, and I was like, oh yeah, it was Gus here in YouTube.
financing at large.
Once completed, is there then a further push to influence market direction in their favor with the potential goal of triggering the opposing side's stop-loss orders? How might such a strategy work, and what are its implications? So, I think
by looking at
that you kind of do that, yeah.
Commented today, which
I mean, like the best case scenario, if you were trying to do a really aggressive thing, is like get a flow that's going the wrong way and absorb against it, and then after that's kind of like
borrowers
calmed itself down a little bit, you create the meta order going the other way to really shove it, right?
Our monetary policy is transmitted through that channel.
And then hopefully that triggers stops and reversals, and then that makes it easy for you to kind of reduce your size a little bit.
Quickly does that move? How efficient is it? And we are really beginning to see now transmission.
But I think that trying to predict the exact specifics of something like that is really hard, right?
Whether you look at investment altogether,
those are
there is
somewhat risky strategies that are much more rare.
still too early, and there is certainly more in the pipeline, but we are definitely seeing monetary policy being transmitted and being transmitted strongly.
So it's much more useful information to the person executing than those of us watching it, right? But
second one.
I think that kind of explaining those sorts of things really helps to a retail trader trying to understand what they're looking at.
So at the last meeting, you said that you were not even thinking about pausing. Would you repeat that today? The second question is, would you agree with a line that's been repeated by many of your colleagues on the Governing Council, that the risk of doing
It'll stop the market from going lower at that point in time?
too much in terms of rate hikes?
Sometimes it does, sometimes it doesn't.
Mr. Canepa, you'll have to understand.
So here's something that I see a lot is you'll see it come down.
Okay, so what I just said
Gosh, the car.
the first question I hope was clear, but I'm going to repeat it for you just to make sure that I'm as clear as you would expect.
Treat them like children.
We are moving to a stage where we are going to be data dependent, and we will take the new projection by staff. We're going to take 2 new readings. We're going to take more information about how transmission is taking place. And on the basis of that, we will determine whether we hike or whether we pause. What I can assure you of is that we are not going to cut. That is a definite no. But on the other side, could be a hike, could be a pause. And if it is a pause, it would not necessarily be for an extended period of time, because as I said, it will vary from meeting to meeting, because we continue to decide on a meeting by meeting basis, every time informed by the data. All right? I hope it is as clear as I can be, because we are, and that was absolutely endorsed by the...
Okay, so anyways, I was going to say something that I see happen a lot, and this is a sort of thing that will happen on like a trend day, is like you'll come down and it's a big stop run, and then you start to see that distribution happen, right? You see that big absorption, and when I say big absorption, I mean like there will be like a 10K iceberg there or something like that, right? And so that's usually the sort of spot where I will get out, right? And then what'll happen is I will see them make another further push. Like they will push it even lower, but then that's often the end. It's like they'll push it even lower, but then it reverts back up.
We want to break the
Right? In fact, that's kind of what we saw here today, because what happens is you get these points, like these intermittent points where the liquidity has, where people have taken a lot of orders and stuff, and you have like multiple liquidity holes active at the same time, right? And so it's not uncommon to see it flip back between and rotate between those 2 holes, right?
Do you consider the European commercial real estate as a matter of concern? And the second one, can you elaborate more in details the spiral between wages and prices? Thank you a lot.
So just be super careful of, because I think that what you're saying is perfectly reasonable, especially if we're taking profit on a trade. But the thing that I see a lot of retail traders do is we're trending down. They see an iceberg. They try and reverse it, and then they just get plowed over and over and over again, right?
Commercial real estate, it's quite clear if you look at our financial stability review that we have paid a lot of attention to commercial property and to the declines in prices. This decline in prices started even before the tightening of monetary policy, and different agents.
In fact, I know that happens because that was the way that I started out. Was I wouldn't get involved in the trend, and so I would wait for the absorption and try and take the reversal and get flattened every time.
Let's say.
And I finally just learned that it was like, no, what you want to do is you want to get in before the trend came in and be getting out when you see those big orders.
In the evolution of price.
And if it doesn't matter what it does after that, because you already made your money.
And on your second question, I think you raised the question of potential risk of second round effect. Let me just take you back for a second, because it's a matter that we have reviewed, that staff is doing a lot of work on, and that we have discussed. It's the role.
Well, I don't know. There's a lot of stuff out there about the DOM that I kind of feel like
Two key drivers
was based on technical analysis, right? So the way that I would approach it is this: there are things that tend to happen over and over again, right? One of the things that you'll tend to see to happen is there will be like an iceberg. So like sometimes you'll see like a big order here, the bid is really weak, and then when they start hitting into that bid, turns out there's an iceberg there, right? And then it reverses. Okay, but then the other thing that you'll see is you'll see an iceberg there, and they bust through the iceberg, and then there's a little stop run through it, right?
Profit margins.
Okay, so
to accommodate.
people would take those as like setups. Well, those are like good places to execute, but the existence of like the iceberg there doesn't tell you very much about whether it's going to go through or stop through or what it's going to do next, right? They're all just kind of like little tea leaves. If you know what the larger flow is, then you can kind of make pretty good estimate of how it's going to go.
Strengthening any second round effect. But we are really monitoring.
I kind of suspect that we may go sideways for a little while, and that after the European close, that the treasuries might be able to push more.
Going down, energy is coming out and is negative. Clearly, we're focused.
But I'm kind of making those judgments based on what I know about what's driving them, how much flow I've actually seen,
We'll continue to look at that extremely.
timing based on when markets open, when news happens, when liquidity holes formed, and how long it takes for them to heal, right?
Thank you.
Because if you're coming in and you're looking for these technical setups where it's like, well, this is likely to break through right here and that sort of a thing, that I never really found success with those things. The reality is that the actual behavior of the market, on such a short time frame, is just really incredibly random.
And with the mandate and the labor market is as hot as it has been for more than a decade, is it something like you would like to see for the whole Eurozone, or is it necessary for the unemployment rate to go up for the ECB to stop hiking? Thank you very much.
Do you mind me asking you to repeat what you said about the unemployment rate in Spain?
No, it's at the lowest point for more than a decade.
Yeah.
And
including for young people, eh?
Yeah. I was just saying that if you would like to see that for the whole Eurozone, I mean the inflation going to 2% and unemployment being low, or is it just not possible and the labor market has to cool down?
I'll start with that one, that your question about Spain, because it demonstrates the beauty of Europe and the heterogeneity that we have amongst the 20 countries that are members of the euro area. Obviously, the numbers that we see now for Spain, with inflation trending towards 2% and hopefully sustainably so, plus unemployment numbers that are as low as they have ever been, is a good set.
Thinking on what I was saying earlier,
it is not
I have that order flow series, and if you haven't seen the order flow series, like, I really recommend watching it, because there is kind of like an overarching kind of strategy behind how I teach it in that series, right? Because at the very beginning, it's just, okay, you need to understand what you're even looking at in the first place, of course. Okay. Then the second thing is, these are the things that you'll see. This is how icebergs and catching the edge and all that sort of stuff works, right? Here's how large orders work. Okay. After that, then I get into what are like the stylized behaviors, right? So the stylized behaviors is kind of more this square root law sort of a thing, where you start to get a liquidity hole that kind of makes it difficult for it to move there. That can result in these periods where it's like we don't go anywhere for 45 minutes, right? And then we kind of get into more of the meta order stuff, which is, okay, how do they execute the meta orders to take advantage of that, and
The issue of the burden
et cetera, et cetera, et cetera.
is very often
And so
I think the burden of proof is going to be on the
most people in
because
trading the DOM
we are
like the no BS approach, which I think is a great course, by the way. But they would learn those setups, and then they would say, okay, when I see that setup, that means I'm supposed to take a trade, right? Whereas my approach is, those are all just kind of tea leaves. And they don't necessarily really tell you, are really super predictive about what's going on. But they just kind of give you a little bit of an idea of what it's doing at this moment. And if you know what the overarching flow is likely to be, then those kind of become a really good guide as to where it's actually going to go, right?
Contributing to the weakness.
But you need to know what that larger flow is going to be, right?
What would it
in this situation
of reduction?
We've traded from the news from about 65 to about 85. So we traded a net 20,000 contracts. That's a lot.
Thank you very much, Mark.
But I think this is a relatively significant situation, right? So we could see more than 20. This could be something that is more like 40 to 50,000 net contracts by the end of the day. That's why I'm kind of like, well, it looks like the liquidity is such that we are going to go sideways for a bit. Okay. Also, we do have some stuff later, don't we? I don't know. Yeah, and MasterCard pending home sales. Okay, so we do have pending home sales.
That will be conducted in September.
And 7-year note auction as well.
Will be very informative.
So there's plenty of things that I think going on today that could push us even lower in the long run. So I'm not very confident in saying we've seen the low of the day, but we have definitely created, pressure on the liquidity that's kind of starting to create gravity that's making it difficult to keep pushing.
As much yet.
Right. Which is what, again, causes that square root law behavior.
Is totally hypothetical, and I understand, why
right.
you would
square root law.
You would want me to answer that question, but it's there are so many data and so much.
When you notice when you do the square root law, a square root keeps going up. There's a point at where, the value of y up here gets touched. It's so far up off the screen that you never see it, right? That's what a square root law does.
Thank you. And next
so like,
of Agence France Presse, AFP,
you can always keep going. It's just it takes more and more and more to keep it doing that.
Yeah. You're suggesting a possible pause in rates, je pèse mes mots, in the near future. Does that mean that during this period of possible pause, we could see an acceleration of the QT?
Are all Europeans like this? Because
doves and hogs.
I feel like I wonder if I'm just getting culture shock here, because some of the interactions between Lagarde and these journalists and everything, I'm like, what are they doing over there?
In the current circumstances, given the level of inflation that we have at the moment.
Oh no, it's a group of videos. It's that whole. So here, I'll show you.
Between either interest rate.
Come to YouTube/Speculator Seth.
Interest rate is the main tool. And the most efficient.
And then you come down, and then the second thing you should see is the order flow series. So they seems like that these are all just like unrelated videos, but this was like I wrote out a document and then realized that it was actually like 5 or 6 videos, and so I split it up into 5 or 6 videos, right? So for beginners video is this is what you're looking at. This is the bid column, this is the offer column, etc., right?
Thank you.
This one is catching the edge and iceberg, so that's kind of more, these are the individual little sort of things that you'll see at individual prices. Then there's the large orders, okay, so that's like, this is what you tend to see. This one, I don't know why that one's in there.
Have been weaker than expected.
It should be at the end.
Economists warning already.
Or maybe it shouldn't even be in there. Okay, then proven market behaviors is, okay, now using the science, these are the things that we know tend to happen. And it really centers around meta orders and the square root law behavior, right?
On that.
And then we get into the inelastic market hypothesis, which is kind of like, I think, the crowning thing on top of it all. Because what we learned from the inelastic markets hypothesis is that orders just have a really strong impact. So like if you're going to come in and you're going to trade, sell 100,000 contracts, the impact that it has on the market is really a lot. That's why you really got to be careful about this, like you want to do market making. Well, if you're market making, you really don't want to trade against that informed trader that's just going to sell 100,000 contracts, right?
Look, doing too much is certainly not something that we are considering. What we are focusing on is the inflation numbers.
Some more comments.
We are committed to deliver 2% headline.
Oh no, this one says that the Discord invite is expired.
This is our commitment. This is the drive of the Governing Council. When I look at headline numbers, when I look at core inflation number, when I look at all the many measures of underlying inflation, trying to really isolate the most robust element and removing the most volatile part of it, we are seeing inflation that is still too high and that we project to remain too high for too long. So we have to do what we have to do, which is currently to hike. We know that we are getting closer, but we also know that the options are on the table to continue to hike or to hold. And we also know that it will vary meeting by meeting because we want to be determined by the data and the analysis and the assessment that we make. It's not surprising that it is transmitting to the financing channel. It is not surprising that there is less investment in housing. It is not surprising that there is...
The goal until September is to really absorb all the information on this, especially in the treasury market. Yeah.
Intended impact of the monetary policy.
I guess to sum it up, the caution that I should make is when people say when X happens, the market is likely to move up or reverse or mean revert or something like that. Because the stylized behaviors that we have are when the market does this, it's likely to do nothing and stay there, right?
To be Paris Agreement aligned. And obviously, as noticed by all of you and as noticed by Greenpeace as well, we stopped any asset purchases under the asset purchase program because we are no longer reinvesting. So as a result of that, under the CSPP, we are not reinvesting. We are letting that portfolio into runoff mode. What we have decided is that we will stick to our commitment to be Paris Agreement aligned. And we will, in the course of 23, elaborate the means and the ways by which we will be Paris aligned. I just want to remind you, and this is not to distract me for a second from the fight against inflation, but I just want to call your attention to the massive amount of work that is being done in the supervision arm of the...
Are they ready to go for more already?
To really raise the level of awareness and the level of concern by banks and through banks by their clients.
If they did another stop run here, that would be a little bit early and would just be another thing to kind of tell you how frantic of a move today actually is, right? You playing the aftermath of the... Well, I've kind of been playing this aftermath of the GDP news is kind of what got me involved. But I'm only doing it from sim. Oh, feeling very good today. Feeling better now, but still a little bit off.
What data is it that gives you more confidence that you may be able to pause? And what data will you be looking at, especially over the next months, that would stop those rate hikes? Is it core inflation? Is it more that you're looking at the downturn in the Eurozone economy and concerns about that? And my second question is about the US and the comparison with the Eurozone. The US has raised rates significantly more than the ECB for a similar core inflation rate, or even the Eurozone core inflation rate is slightly higher. The IMF, your former employer, said this week that the ECB might have more ground to cover. Do you agree? Do you think that there is a suggestion that there might be more work to do in raising rates? Thanks.
Thank you, Mr. Fairness, for you two questions. What data will be important? All data. And obviously, we will be looking at all inflation data. Starting with headline, we will have 2 readings before our next September Monetary Policy Governing Council. We will look at core inflation, but we will go deeper into underlying inflation numbers to really appreciate and understand what is moving and what is steadily, sustainably moving. We know that some indicators are showing, particularly in the in goods, it's pretty obvious. You look at producer prices, it's pretty obvious. But when you start looking into services in particular, you have to really dissect those that are energy intensive, those that are interest.
So here's the e-mini open. It looks like the first little bit here is selling.
What share of labor there is in various segments of services. So we have to look into all that to understand whether the action that we have.
Yeah, so that's what I was kind of trying to talk about earlier. Well, so I started out with no BS course, right? Only the basic course. I think his stuff is great. Yeah, he hasn't posted something on YouTube, but he's still around. I think that he has like a newsletter that he posts every day. Kind of goes over the flows and like his read of it and stuff. It's kind of expensive, but he's still around. Kind of like what I'm trying to do is I'm trying to build on top of it, because the way that things worked for me was, you know, he comes in and he discusses these setups and he's like, okay, so here's one, like I was trying to talk about before. He'll say, here's an iceberg one, and here's one where they push through it, right? How do you know which one it's going to be? Well, you'll know. And when you hear him or you ask him about it or you hear him talk about it, because you can email him. If you email him, he will respond, okay? He'll say, well, it's just the context, and like, what is context, right? It has kind of always been this amorphous thing, right? So what I'm trying to do is I'm trying to expand upon what they've got there, because what John Grady's course does really, really well is shows you the kind of game that you're playing. Like what kind of goes on, right? But I constantly found myself saying, oh, I think that this is going on, and so it will result like this, and then it didn't happen that way. And I just didn't have enough success from the trading on that alone. You know, it was very difficult, right? And that's when I kind of learned these things, like especially the thing that would screw me up is I would try and take these absorption areas and think that they were going to reverse, right? And what I continually would learn is that like market orders can just materialize out of nowhere, right? It's really hard to predict, you know, when a bunch of market orders might just come out of nowhere.
We just discussed.
And that's when we kind of started to get into this elastic market sort of stuff, where find out that, you know, if somebody is taking a trade based on, even if it has absolutely no informational content whatsoever, you know, it's still going to move the market. It's still going to move the market.
Isabella, please.
And so now what I'm doing is I'm saying, okay, so to really have success with this, you also have to know, you have to have a prediction of what the flows are going to be. You have to look at all of the things that you have that can predict flows, which are usually informational things like, what was the economic numbers? What is, what do certain kinds of funds have to do? These sorts of things, right? When you combine those together, now you can kind of look at the stylized behaviors and the games that you kind of see played on the DOM, and you can start to make very accurate predictions about how it's going to play out. If you know what the flows are going to be, right?
And then the second question, if I may, is...
So in this situation, I don't know if there's more than the 20K, but I suspect that there will be. So I think that we probably play around a little bit, and that maybe in the 8 o'clock hour they try and push for new low.
The governing council, and it had
Right.
an impact also on today's decision. Thank you.
Right. So what I've done is I've been able to take that, what he calls context, and I've been able to expand it out and say, okay, what we actually care about is predicting future orders. What are things that can predict future orders? And then we can break it out into all of these different things that we've found that can predict future orders. Because future orders can come from anything. They can come from news, but they can also come from fund rebalancing, and those matter too.
As a result,
Right. And that, I think, is kind of the innovation that most retail traders are missing.
sustainable.
Because the retail trader wants to only look at the market data that they've been given, like what prices have traded or what they see on the DOM, and make all of their decisions off of that without having to know anything about what's going on in the broader market in the industry. Right. And while there was a time where you could kind of make money doing that, I don't think it's a very realistic or effective strategy anymore because of the robots.
The bank lending.
So you have to be able to use your human mind and all of the information that you can gather by constantly studying the market to make those judgments about what the flows are going to be instead.
It's very
Right. And if you're very selective, only go in when you really feel confident that you're going to have a strong flow. That's when I started to have a lot more success.
continued to decrease in June, falling to 3% for firms and
I wouldn't say that that's like, don't make me a millionaire or anything like that, but I've been performing a lot better the past year and a half, 2 years.
Seeing it very mildly.
It is generally positive trading, and
but we're seeing
especially when I
and the same holds for both.
add it with risk taking over here.
So yes, of course, this is one of the element of transmission that we.
Oh, I didn't notice we did push well into 101. Now we're at 101.3.
Obvious, particularly on the part of corporates. A bit less so for households.
In the dollar.
Corporates, absolutely.
How far can the dollar go?
Thank you. And this brings our press conference to the end. We wish you a very nice and happy summer, and see you.
Okay. I wasn't paying enough attention. Did I miss my favorite journalist? Oh well. Oh well. I'll just close it down because I'm not a huge fan of listening to the ECB. I was a little surprised to be hearing them talk so, like really actively expecting weakness in the euro economy. It was a little bit of a surprise to me. Here's what I think is going on in. I still have a little gnat in here. You saw alligator in the background. What? Oh. No, so what I think is going on here is like world liquidity has tightened up. And so you are seeing economic weakness from that. But what's happening in the United States is that we have this stimulus in the form of student loan forbearance that everybody keeps forgetting about. I mean, it's been there, but everybody kind of said, it's trivial. But like they were saying, like the amount that is there, it does matter. And can that kind of counteract what's happening with monetary tightening? Yes, very much so. And so what you're seeing is the consumer continues to be strong because you're giving money to the group that's most likely to spend it, right? Those people with college debt, those are the people that are the most likely to spend, right? And they're not saving it up. Like my brother, he has some student loan debt, and because he doesn't have to pay it, he just hasn't been paying it, and he's just been saving it all in stocks and letting it grow, right? And so his hope is that they don't, that he never has to repay it, and then he can use that chunk of change to like buy a house or something like that, right? So in the meantime, the money that, so he's saving it. But that's not what most people are doing, right? Most people are like, oh, I need that money for this, I need that money for this, and they're spending it. And, you know, like one of the things that you're seeing happen in the economy, don't be fooled by people. Oh man, let me tell you what. So you like watch TikTok and you see people talk about like what their life is like and things like that, because they always say like this is the one that drives me crazy. It's like, oh, well, the reason millennials aren't having kids is because we don't make enough. It's bullshit. It's total nonsense. Your income, relatively speaking, for millennials is the highest that it's ever been for any generation, right? The reality is that millennials are not willing to sacrifice to have kids as much as other generations did. Other generations, they were going to have kids whether even if they had to be destitute poor, right? And millennials not willing to do that, and that's why they don't have as many kids. When you look at like consumer debt, for instance, that's one of the charts that people pull up a lot, right? Consumer debt is like at highest levels ever, right? But that's like in nominal terms. When you look at like debt to income ratio, it's actually extremely low compared to recent years, compared to like the 2010s and stuff, right? So the, you know, millennials in particular, their financial position is actually pretty good, right? So while you got everybody on social media saying like things are so rough out there, etc., 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 actually all of the numbers say that people actually are doing pretty good, and that probably the people that are doing really good are just not saying anything because they're afraid that they'll be attacked on social media, right? And that's where you're getting the inflation from, right? So then, on top of all of that, you got this student loan forbearance, and you're giving it to the people that are most likely to spend it. That ends up creating a really strong consumer, and you get the kind of behavior that we've been having where the Federal Reserve is trying to tighten financial conditions, and it just doesn't really seem to be having any impact, right? Then the other thing that's going on is that corporations just don't need to take out as much debt because they took out so much debt during the pandemic when interest rates were low. So because we've held interest rates low for so long, the raising interest rates is not as powerful of a tool as it used to be. I would say that running off the balance sheet is, but it's being canceled out by the student loan debt. So once you get past August and the student loan that thing is changed, and granted, Biden has kind of changed stuff, so maybe a lot of people still don't pay it, right? Okay, so if we get into where everybody has to pay, and we'll have to look at the numbers, but if that makes a big change to people's income and everything, then you could see some real economic weakness. If we don't, then at that point, I think that we're back to the fear that you're going to see another bout of inflation. So if you like back off on the tightening financial conditions and you're still doing this like stealth stimulus with student loan debt, then you're probably going to get another bout of inflation. Call the fund Conant's contextual finance. So I was thinking about this morning. One of the things that will make me late in the morning is just thinking about things too much in the shower, and I'll be like going really super slow. And you know what? I enjoy my showers. Okay. But, one of the things I was thinking about with the fund is that I think one of the challenges with doing the fund is that you've got a lot of options, right? Because I think that the simplest approach would be to just create a hedge fund and find a simple strategy that's hedge fund. I think that there's somebody out there actually kind of already doing that, but just the momentum hedge fund would probably make a lot of sense for us, right? But some people will want to get involved in private equity, things like that, right? So then what do? You have multiple funds, and how do you sort all? That's a lot of money that's required. Probably you branch out over time, right? But then another thing that I was thinking about was one of the things I'd really like to see is a micro investing economy. So a micro investing economy would be like, okay, we already have crowdfunding, right? But with crowdfunding, you don't get equity. I want to see crowdfunding where the people that are crowdfunding it get equity, right? Well, there's all sorts of rules around that make that difficult, right? Because the amounts and things like that you're talking about kind of end up making everything private equity, right? But with this test, maybe that opens the door. Maybe that opens the door to you being able to make a crowdfunding website like that where you get equity. And it's just that you have to have taken that test in order to be able to participate. Yeah, well, so there has been some attempts, but my understanding is there's been some problems. Let's see here. Start engine. And a WeFunder are ones that I haven't heard of before. Crowdfunding service which connects startups with investors online. WeFunder uses a provision in the 2012 Job Act which allows unaccredited investors to purchase equity in early stage private companies. Okay. Secondary alternative trading system regulated by the SEC. So, but, going back to what I was saying, because I don't understand all the specifics, right? But my understanding is that there are some limitations that make it kind of hard. Because I remember, I think it was crowdfund or whatever they're called, the one that everybody uses, that were saying that they wanted to do it with equity, and there was like roadblocks to that. I don't know what the roadblocks are. You tried to get one on WeFunder? Oh, look, there's a Wikipedia page. Let's check out that Wikipedia page. WeFunder was founded by Nick Pomerello, Mike Norman, and Greg Belote in 2012. Well, if it's been back from 2012, it must not have been too successful. So what's with that? The startup incubator Y Combinator backed WeFunder during its development and launch. The company raised more than $500,000, receiving startup capital from nearly 60 investors, including angel investors Nihal Mehta, Dharmesh Shah, and Bill Warner. As of 2019, the company has raised over $9.8 million from over 100 investors via the WeFunder platform. Annual fund rate increased over $200 million. Okay, but 9.8 million is not that much, right? Okay. WeFunder is predicated upon the idea that anyone, regardless of wealth, should be able to invest in a company. As of now, only accredited investors are legally able to fund startups, and these investors must put up at least $1,000 to have an equity share. Once the full deregulations promised by the Jobs Act are unrolled, the company plans to lower the barrier of investor entry to 100. Okay. So maybe they are kind of planning on... So they're looking at the same thing that I am, essentially, right? Some of these references on the Wikipedia page are dead. Am I finally going to get filled on this second contract or what? Let's move it up and then watch they won't fill me. What do you think on prop? I'm not a huge fan of them, to be honest with you. So the problem that I have with the prop funds is that the metrics that they're asking you to make are actually quite risky. Basically, they encourage traders to really put on risk. And what they want is they want to catch like the hot hand, right? But what ends up happening is most people will fail the combine. And then the people that do pass the combine, they're not able to keep that performance up, right? And so they eventually they lose their account. So I think that it only makes sense if you want to do a yo-YOLO strategy. Like you have a strategy that you know has severe weaknesses with it, but could generate a lot of money from taking on the risk while it's doing well, right? That's where I think a prop firm makes sense. But especially for learners, because everybody says, oh, start with the prop firm and it will help you learn to keep rules and things like that. I say no, because I think that you should be more conservative with your risk. Like I would have it so that you don't lose more than 1 to 5% in a day. Like max, not just per trade, but max. They might. So it looks like I didn't necessarily have to move that contract up, but that's okay. We might be able to start pushing down lower. It looks like they did. No, they just kissed the bottom. They didn't break through. But enough is traded there. I think that we probably will go a little bit lower. We'll see if they pull back or not. WeFunder is comparable to the Funders Club, which launched as part of the last Y Combinator class and has since raised $6 million and attracted international attention from the media, investors, and entrepreneurs. The Jobs Act may not be in action yet, but when it is, it will democratize the early stage investment process for startups and investors. Yeah, good volume on most of the prices. So one of the things that I will note is that, like, you know, if it's a price that they really don't want to trade, like there's really just not demand to sell into that price, then you won't see very many contracts trade there. So it's quite common to see hardly any contracts at the low of the day, you know. Very few people are able to pick it up down there. But when I'm starting to see a couple thousand at the low, that's kind of like, well, maybe they're not done yet. Let's read more about the Jobs Act. The Jumpstart Our Business Startups Act is a piece of U.S. legislation that was signed into law by Barack Obama on April 5th, 2012, that loosens regulations instituted by the SEC on small businesses. It lowers reporting and disclosure requirements for companies with less than $1 million in revenue and allows the advertising of security offerings. It also allows greater access to crowdfunding and greatly expands the number of companies that can offer stock without going through SEC registration. Jobs Act allows retail investors to invest in startups in two ways. First, it lets startups raise up to $1 million via crowdfunding, which is a form of investing many small investors pooling their resources. This is different than crowdfunding websites such as Kickstarter. Secondly, it greatly expands a category under a rule called Regulation A, which allows companies to offer stock without going through the process of register. Oh, yes, I'm familiar with that. So there's actually 3 websites like this. But if they reach the low and someone decides to hit the offer, it will go down until someone is willing to buy. If nobody hits it, it will just bounce from no real interest from the sellers, right? Well, that's not the way that I would kind of take like a completely different kind of mental model of what's going on. Because what you're talking about is kind of the auction theory way of looking at things, right? So auction theory says like, well, they're just going to keep going until all of the sellers have sold and somebody's actually willing to buy. And then maybe we'll auction back the other way or something like that. What I would say instead is that there are people out there that need to sell very clearly, right? There has been a change in the perceived economic conditions that is necessitating people come in and hedge or execute based on those changes in perception, right? So they have to trade, and the amount of contracts that they're going to be trading is like way more than what the available liquidity is, right? We're talking about tens of thousands, hundreds of thousands of contracts, right? And from multiple different parties as well in this situation, right? So they're going to keep selling until they've sold all of the contracts that they need to. Okay. Now, those orders have so much impact. They're so strong relative to what the liquidity is that it just moves it. And that's why moves always end up being like way bigger than we anticipate, right? All of those sorts of things. It's because orders just have a strong impact, right? But, you know, if there's liquidity being placed somewhere and those guys aren't hitting it, right? Then that kind of says maybe they're done, right? And the whole thing is that there's kind of a square root law. So once you would think, so let me go into the square root law thing because I haven't taught you that yet, right? But I've mentioned it a bunch of times. So if I say I trade 10,000 contracts and it moves the market down a certain amount, okay? Well, then if I traded 20,000 contracts, won't that move the market down twice as much? But that's not actually what happens. Instead, it moves it, 1.5 times as much, right? This is a square root law. So every time that you double it, the amount of extra that you get is half the square root law. Okay. So the market makers kind of see when that square root law is coming into effect and will take advantage of it. And so that's why you will start to see this situation where like nobody really puts up orders at a certain price, but it's like it gets stuck there, right? It gets stuck there. So it might happen at 21, but I think that they're probably going to push lower here now, right? But you get this thing where like it will trade back and forth at 21, but then like hardly any contracts go into 21.5 and hardly any contracts go into 20.5. And if they do, there's icebergs there and plenty of people willing to absorb it, right? It's because the market makers are seeing that square root law and starting to clamp down on volatility. Right? Okay. So you're kind of combining those two things. And what a large executor will do is they will go do this until they start to create the liquidity hole, and then they'll back off. Because in this area right here, they can execute a lot, even though there's not as much latent liquidity. It stays there for so long that they actually get a lot of contracts at that price, right? And then when the liquidity has recovered, you go and you take that liquidity out again, right? So that's how we were able to come in and say like, well, okay, they're probably going to like develop a range here and kind of back off. And then later, after the ECB is done, we're probably going to get another wave, right? So how did I know that? Well, I just know that the economic news that we got is going to prompt a lot of people to have to execute, right? Let's say it goes down by a few more ticks and you see a large amount of buy market orders. That could mean, well, doesn't necessarily. So when I see absorption, I'm not trying to make a call about that's going to be the low of the day or something like that, right? But what I am looking for is, okay, so if we take out too much liquidity too quickly, then what does the latent liquidity start to do? Do we start to get this thing where they don't offer or bid very much at a price and it just goes back and forth across that price? There you go. Look at that. I really should have probably traded this with my live account. Because I avoided doing it because it didn't feel very good. But it clearly has not affected my trading at all, right? Because I've got this thing almost dead on every step of the way so far. So see, now I'm going to be watching for if another large transaction comes through like that. I think the second leg was retracing FOMC. I'm not quite sure I understand that. So what I see is that the lows of yesterday was at 21 and we just busted through those. And now we're touching the lows from the 25th, which is at 17.5. But that, I guess that is a retracement of the move from June 12th. I forget what that one was. I think that one was CPI. Let's see here. Yeah, that was the CPI. Okay. So there has been a little bit of liquidity has been taken out here. I am seeing a little bit of that, like the bids are a little flighty and weak, but I'm also seeing icebergs there, so I don't think that they're done. Okay. Still seeing a lot of kind of level 2 activity, especially on the inside here. That 18.5 is a little flighty, 18 is a little flighty, so it looks like the bids are just kind of like pulling out of the way, and those market orders may just keep coming. $392. Right. Now, in this kind of a situation, I would expect to see, you know, like right there, 17. Wouldn't surprise me if it was 2,000, 3,000 for them to trade through that. It's not enough to stop them. Like, these guys need the liquidity. They're just going to plow through this stuff. So how do I know when they're done? That's why I watched cumulative delta so closely. So now I can see on this move, we've maybe done 5,000 net contracts, right? So I think there's probably plenty left to go. But we'll just wait and see here if there is any kind of major shift in the flows. They are having a little bit of a back and forth at 18. So even though you pointed out those crowdfunding websites to me, I think I need to learn more about these laws because I'm still wondering if you make one where where you have to have passed that test to join the website, if that would give you access to a larger array of companies. Look at that go, man. So this is where it's getting to the point where it's like I almost just can't help but want to hit into it with my my live account. That might mean that they're almost done here. You have a way to go, but you're on the right. Well, that's good. I really hope that the people find me right away, that really helps them. Because the thing that I think happens is people come into trading and they have this preconceived idea about what trading is. And so they spend all of their effort in learning that, which doesn't help them at all. And then it's very, very difficult to ever, you know, get yourself away from that. You know, once you've learned the bad habits, they're hard to get rid of. We don't see much volume. Well, I mean, we're still seeing about 2,000, 3,000, right? Like almost all of these prices, except for 20.5, almost all of these prices have traded a couple of thousand of contracts at each step. It used to be that you would see, you know, in order for them to trade up or down a tick, it required 3,000 contracts is what it used to be. So, but like, that's the thing, is that the number of like the amount of liquidity out there in the market may have changed and declined, but the amount that these big meta orders need to trade doesn't, right? They've still got a lot of money to trade. So just moves it a lot, right? You get more volatility. Yeah, there's an iceberg there at 16.5. So that might do it. And the 10,000 at 16. Although, so you got to be careful about 16, because 16 is like a half of a handle. So you're always going to see something kind of fishy at 16. That might be enough to stop it, though. Let's see. Okay. Darn. Well, I could hit 17.5. I'll hit 17.5. So I'm worried about actually. Yeah. Well, so like, look at this. So this is what I would be. This is what concerns me now. So we just saw a pretty significant decline there. Oh, maybe I could have gotten it. Pretty significant, but look at the cumulative delta now. So there's some pushback here now. Somebody's pushing back against this. And the issue is if we're getting a meta order that's the opposite way, right? You've got, I'm going to say all of this right here that is going to be pretty weak. Right. So if there really is a strong meta order coming in here, you know, they could retrace all of that very quickly. Now, I don't think that that's what's happening. I think that probably that might be more profit taking. I think that what you probably see is it'll come back to there and then kind of do this, or they're going to make another push and then it will do that. But let's see where they kind of settle in at. We'll see if my exit there was good enough or not. But I could have gotten a tick or two more, but that's just kind of splitting hairs, right? But like a 6K iceberg, 10K trading at 16, that's more significant numbers, right? Yeah, the easy trade is over for sure. Right? That's kind of the thing, is that it wouldn't surprise me if I could hold that, because like what we were at 3, well, I guess we've traded as low as 3.856 today. Okay, but for most of our session, let's just say there was 3.89 was one place I could have gotten involved at, or 3.9. Let's say 3.9 just because that's easier to kind of judge. Okay, so we're 2.5, 3 basis points higher from there. And on the large moves that we've had recently, they've been more like 8 to 10 basis points, right? So it's entirely possible that they continue to push today, but it's just going to be a lot harder for us to scalp and catch it, right? And they're probably going to be smaller. Like that move was 16 ticks. Man, that was a strong move. That was a strong move. Yeah, I think getting out there is the call for sure. You don't when I start to see a lot of trade in an area, right? Like signs that there are big players clashing into each other. I don't want to be involved in that. I want to avoid them, right? I don't want to play the game of who's going to win here, who has more, etc., etc. It's better for me to just like, okay, this is what I'm looking for. This is the, okay, I won. These two guys, they need money, they need liquidity now. I'm gonna give it to them, right? It's kind of funny. It's like, because I went through this for such a long time, and this is just why I kind of say what I do, because these are problems that I had, right? Is I would see an iceberg like that. I would see that 10K and I'd be like, okay, now I want to get involved. That's a signal. I want to go long or I want to go short. And I'm a step behind, right? Like that should be where I'm getting out and not necessarily take, because it actually kind of becomes harder to predict what's going to happen from that point, if it actually moves at all, right? And how do you catch that? Well, you have to know. You have to know this is going to, like honestly, if we come back to this, and we try and play this game that the technical analysis people try and play, right? And they're like, okay, we did that. Now what do I think is going to happen? Up, okay. Up a little bit. Okay, so that's a double bottom. That's a double bottom. So maybe I can try going long from here, right? Isn't that the way that you play it? Or do you say, no, this is a downtrend and I want to trade against a downtrend. I'm going to go short. But where do you go short from? Because I think it comes back quite a bit here, doesn't it? Oh, not too much. Not too much. Okay. So now here at this point, do you go short? Well, that would have been the right play, but can you effectively judge from all of this that that's what the play is? Because I've definitely seen things where it's been like that and it totally reverses. Now maybe not this far, but like from that spot right there, totally I've seen at times where I would buy into that because it's reversing, right? But what do we know? Well, we know why they're selling. GDP was much higher than anticipated. Eurozone is looking weak. And the dollar is getting stronger, and that's pushing treasuries down. So I know they're going to keep selling it. Right? Easy call. Easy call that they're going to keep selling it, especially when I look at how much changed. There was 20,000 contracts. Right? There's those funds there probably still need to execute. Right? Easy call. I really should have traded it live. I've been way too cautious, but I don't know. I still feel like when I take a gulp, I can still kind of feels hot, like my chest is hot. And my back like really hurts right there between my shoulder blades. And I'm not incredibly focused, right? Like, I think that if I was stressed out from it being a live order, I don't think I would have played it as nearly as well as I did there, right? Having the sim and having the risk and being able to let it ride because I've already taken sequential profits makes it a lot easier, right? Okay, well, they've kind of bounced around here. I kind of suspect that they might break a new low a little bit and then fill out 16 a little bit more. It's awfully heavy. You can certainly see that much, right? What are your thoughts about VPN? I've never heard of that. NNFX? Is that a YouTube page or something? Sounds like a scam. No nonsense Forex. Oh, that's way too big of a channel. So if I come in, I'm gonna eat my words someday, because someday my channel will be popular and then I will, be in this situation. But if I come in and I see, 200,000 subscribers, I'm immediately like, well, I don't know if you'll be able to get too much from that. Too popular. Too popular. Plus it's 4x, which that I'm immediately like, no. No, he doesn't have too many. Oh, no, actually, he does have videos. Those are just like recent videos. The G channel. Ugh. It's clearly an indicator. Well, a lot of the stuff that he's talking about is not. So many, even though he has a lot of subscribers, some of his videos don't get. That's really weird. Yeah, I kind of wonder if that number is fake. Because there's no way you have 284,000 subscribers and your average video is 3.8 views. 3.8k views. That's a little low for such a big channel. Am I wrong? By the way, how well has my most recent video been doing? We got into 500 views on that video. So that one's been doing really well. Okay, but on volume profile, if you haven't seen it, I put out a video on Monday about volume profile where I talk about that. And a lot of the things that we've been talking about, I've kind of been pushing back against, because I'm like, well, those kind of sound like auction theory kind of ideas, right? So it's actually on a daily basis not doing as well as some of my more popular videos still. But it is definitely tracking well compared to the last few videos. Oh, and we almost are. 473. If I get to 1,000 before the end of the week, actually, I don't think that that's possible. Most likely it gets to 600. But if I did get 1,000, that would be like a huge change for the channel. And what else does it tell me? What are we doing on engagements? So that the first bit, I've still got over half people watching. That's good. 58% of viewers are watching around the 30-second mark, which is, it says that's typical, but that's good. People are clicking the end screen elements. That's good. You feel inspired by the background music? Stream beats. That's Harris Heller's thing. That's how Harris Heller became a millionaire with Stream Beats. Michael, good morning. Yeah, everything that is massively popular does not. That's the same way I am. I mean, I guess I've gone back and forth at times, but I definitely get to like, you know, if it's like pop culture popular. Okay, so like I think there's two kinds of popular, okay? Like there's one kind of popular which is like, okay, for men, for instance, watches are pretty popular among men. That's actually like a relatively popular hobby, okay? It's not like in my face all the time, but if you start searching for watches, you're just going to start getting a lot of advertisements for watches. It's crazy how many different companies there are out there for watches. It's just insane, okay? There are things that when you get to a certain age, you're interested in. Barbecuing, World War II history, you know, these are guy things, right? Okay. But then there's like pop culture popular. It's like if I watch Entertainment Tonight or whatever those shows are that they, you know, that they're pushing a movie, there's like active promotional stuff for this thing that's being put in everybody's face all the time. I avoid that stuff like the plague. You know, like the big thing has been people have been buying Taylor Swift tickets. One of the things that they've been saying about that shows how strong the economy is how well Taylor Swift tickets are selling because they're super expensive and people are still buying them, right? No. There is no way you could get me to go to a Taylor Swift concert. Not because I hate Taylor Swift or anything, but that's like that I'm immediately like, okay, that is the mass public falling for marketing. And I want to stay away from that as far as possible. Like I'm going to actively avoid even exposing myself to the cultural impact of that because I don't want that to affect my thinking. You know? So it's I'm kind of like that. But then there's those other things that are like, you know, you get to a certain age and you tend to start to get interested in a certain thing. And people will say, oh yeah, you're so basic. And they're kind of shaming you for being interested in that thing because it's basic. I say embrace those things because there's a reason why a lot of people are attracted to that, right? Yeah, I feel that smart money concepts kind of got to that level where the YouTube algorithm had picked it up as a term. Like when people are making videos about the creator, that's when you know what I mean? Like Mr. Beast. Mr. Beast is a guy, right? He has a YouTube channel, okay? And now people will make videos about Mr. Beast, right? They'll make videos like they're not even interviewing him or anything, and they're just analyzing Mr. Beast. How does he make his videos? What's going on? What sort of drama is going on in his life? That's that sort of a thing, right? When you start seeing those sorts of videos about something on YouTube, that means like it's gotten too popular, right? If you started seeing videos like that about me, that would mean we'd need to make some changes. Like I think it would be hard for us to have successful scalping in that situation, right? Unless maybe they're talking about me because I ran a successful fund, and then that's a different thing, right? But you know, but that's what happened with ICT, right? Is that other people are making videos about him that are like, well, you know, you guys are having a hard time understanding what he's saying, so I'm gonna make a video and try and explain it to you, and you know. And so like ICT is now a term that like YouTube picks up and that you can get stuck in the hole. You watch one video about ICT and now all of a sudden you're getting dozens of videos about it. Were you short? I was short the 10-year from 17 to 17 half. I haven't been participating on this latest little thing, but I kind of suspect that there's going to be another little stop run and then they might revert back to 16. We'll see. NNFX does a lot of debunking. Well, okay, so you gotta be careful with that one, right? Because one of the best, if you're like trying to promote yourself, right? One of the best ways to promote yourself is to take down other obvious scams, right? Like there is ScamTube, right? But there is also anti-ScamTube that is just as much of a hole, right? Like the CoffeeZilla and them, right? Yeah, now we're getting meta, right? So some of the worst players that I have seen in the space, they do that, and they make a video about everybody that you can possibly imagine, and they're making videos about how this creator or that creator is a scam, right? I've had people make videos like criticizing me. It's like, oh, okay, so I have a YouTube channel where I share with you scientific data and trade live, and that makes me a scam. Like, what the hell? That's just so bizarre. Oh, because we have affiliate links for Jigsaw, which is like, oh, it's a trading platform. It works very well for what we're doing. It's just the most ridiculous things, right? But the reason they do that is because they can take down somebody else down a notch, and then that gives them credibility, right? In those people's eyes, that gives them credibility, and then they don't look for what that guy is doing that is like just total BS, right? I see that all the time, and I believe that ICT has been engaged in some of that sort of stuff too, right? What you really want to look for, or what you would really like to see, and what I try to do is the most valuable person is going to be the one that makes everybody else around them more valuable, right? So that's kind of like the thing that I would say. So number one thing is what is the actual empirical evidence, right? Do they actually post any kind of empirical evidence about what they're saying? Most people in the trading space, they don't. They just say stuff. They give like general advice, and they can't actually prove anything that they're saying, right? And by the way, you having made money off of it does not prove, right? You have to show it with the market data. Like, here's the strategy, here's the market data, here's how it performed, and show that you have a large enough data that it's not random and this and that, right? Because there's all sorts of crazy, silly things that you can do to make a ton of money. And not actually have a good strategy or be wrong about that market behavior, right? So the first thing is the empirical evidence, but then the second thing that I would look at is like the people around them. So are the things that they are doing helping to make the people around them more successful, right? Or are they just stepping on those people's heads to promote themselves, right? Because I definitely see that sort of a thing where it's like, yeah, they have like their flying monkeys, because usually these guys are narcissists, right? They have their flying monkeys, but they're constantly stepping on those flying monkeys to elevate themselves, instead of taking the approach of, well, my job is to help all those people be successful, right? And so in some respects, I am the bottom of the totem pole. Like, I'm serving everybody else, right? Not in CoffeeZilla sense. He did these refutation kind of things long ago that just one little part, and then he gave a whole different strategy to trade with, which is heavily based on indicators. Well, there you go. Leave it to Salim to just come in with something completely random to try and troll us. Dude, okay, so we do get what, oil numbers here? No. Oil, natural gas. So we did go lower. It's a decent amount traded there at 14. That kind of makes me a little bit cautious here. That makes me think that maybe this is going to keep going even more. We'll see if they're able to come back to 16 or not. But I'm still seeing a lot of pressure here. They're taking out a lot of liquidity. Even this spot where we're at 9.2. And I was like, oh, I should have taken it live. I could have even taken it then at that point and I'd still be doing well. I'm too picky. Every time that like there's a big market move, I'm not in a good personal spot and I miss it. That's been the case at least past month or two. Before that, I caught some really good ones, though, right? Oh, this downtrend in treasuries. We're up like 5 basis points now. So if I had kind of taken, so I took it on sim, and I took it on two legs. Like I took it, got out, let it come back up, took it again, got out. Now this last leg I've kind of missed, but so if I had taken it live, I would have gotten 389 or so. Was about when we started going, yeah, this is obviously going to go up, right? So I could have been up $50 now. But when I came in this morning, I was having like acid reflux, and like when I was eating, it was like felt like fire going down, and I hurt my back somehow. Like I woke up and just my whole upper back was just on fire. Probably the traps. And so I kind of, and then it was the ECB on top of that. And so I kind of said, no, I don't think this is going to be a good day for me. So I didn't trade it. Like I made the decision I wasn't going to take any trades. And, you know, I traded it sim and I did well, which kind of suggests to me that that was the wrong take, but I look okay. Yeah, I don't think I should, like, my face should look bad. I just uncomfortable. And like when I'm a little uncomfortable like that, you know, really distracts me. Makes it it's really hard for me to focus. Hard for me to focus anyways, right? But now 22 traded at 14. That whole setup, though, is for it to go like at 16, it stayed there for 10 minutes, and then went a step lower and it went there for 10 minutes is a little unusual. So I think I'm going to be hands off from here. I'm awfully tempted to like, oh, I should get involved in this. It could just keep it going even further, but I think I really need to be hands off here now. And same with like on the micros, I could try and like scalp between 14 and 16, but I don't think I'm going to do that. I think it's going to start to get a little messy. Yeah, you need to feel good in your skin. Yeah, well, I don't know, like maybe it's just lucky. Like I think in this situation, I think that choosing to not trade was the correct choice, because what if the flows weren't so clear, right? It's kind of lucky that we just got a situation where what the flows were going to be were so clear. But at the same time, I should have come in and said, well, the flows are clear enough that I should trade even though I don't feel my best. Is probably what I should have said, right? So that was kind of the misjudgment that I made. You know, and you know what? Another thing that happens, I'm gonna blame you, the wealth pocket, because when I got somebody that's relatively new that's coming in, and I feel like I'm putting out a lot of information and they're getting something from what I'm saying, then I don't care as much about missing a trade. You know, like I'm totally, I think that that's kind of part of my lot, the disadvantage of this particular role that we have on the team is that sometimes I need to take care of you guys rather than taking the trade. You know what I mean? Oh, thank you so much. Love you too, Celine. So this is really weird. Oil today. I'm just noticing that like oil was up at $80 at one point, right? And then it dropped all the way back to 79, fell a little bit short, and then bounced all the way back up to 80. And meanwhile, the dollar is at almost 101.5. And the dollar does not seem to have slowed down at all today. Oh yeah, I sure hope Uzi's shorted CB. That was a good move. A good move. You know, we've actually had bigger moves recently, but there's something about this one that just felt so clean, you know? Just ping them trains. Well, the consolation is that I did, even though I didn't feel good personally, I did say like I should absolutely take this as a sim trade just to show. Right, and I did, and I think that it was a very useful thing. I just find great value in streamers like you. That's why I take my chances and ask away. Yeah. Well, you know, I'm really frustrated by a lot of the things that I see on social media. You know, like it feels like every time, every step of the way, whatever ends up happening kind of makes me mad. Like, I remember being excited when Facebook added status updates, right? And happy about, like, everybody's on Facebook now, and this is great because now we can do the social media with everybody, and that ended up being a disaster, right? Or the more recent one, Twitter, because I was like, you know, I don't know if I really have a strong opinion about Elon Musk, love or hate him or whatever, but I do like that he's taking Twitter and that he's going to make it more free and open and bring free speech back to the platform. I think that's really important. I think you have a really important goal. And then he turned around and he said, oh yeah, and by the way, we're going to turn it into this everything app that will be like 50% of the financial system and all that. I was like, no, I do not want to give you that power. No. Right? Streaming, small streams, is like, I feel like the one place left on the internet where you can really have the kind of internet experience that I enjoyed when I was younger and that I really feel like the internet excels at. So everybody focuses on the viral nature of your ability to influence millions and millions of people. But I think where the true strength of the internet comes from is the ability for you to make a small group of people based on a really small niche interest that you wouldn't otherwise because of geographical considerations and stuff like that. You know, having a group of guys on a stream that's just 1 or 2 dozen guys, that's so valuable. Like, I am not almost everything that we've really gained edge from. I don't think that I would have learned and discovered without you guys here on the stream helping me, and without that kind of pressure pushing me. And I understand it. You understand things a lot better when you teach it to people and all of that sort of stuff. And us working together, we've been able to do really well, I think, right? And that's the power of streaming. It's just like the last place left where I think you can have that. Yeah, quality over quantity, exactly. Do you have subjective interpretations of order books? Well, so the way that I try to approach it is, again, there are things that you will see happen, right? And I call them tea leaves, right? So seeing them hit into 12.5, okay, but they didn't clear it. So that is a little bit of a tea leaf that it may be slowing down a little bit here, right? There's some sort of a bid iceberg at 12.5, but that doesn't mean that it's not going to trade down there, and I wouldn't take a trade off of that. That's not a strong enough signal, right? But it's just kind of the things that you're going to see. Each step, you take note of those, and that kind of give you an idea. Okay, so when they did clear it, pretty good offer placed. Okay, So there's a tea leaf in the other direction. See what the 12 does. This is 12 pull. Doesn't look like it's going to. Looks like it's probably still going to be like 2,000 contracts to trade it. Right? And so I'm just kind of looking at all of those things. Okay, 2,000 contracts, although they traded it very quickly. Now there's a lot of liquidity down in here. Okay. So it's just every step of the way I'm looking at those things, right? But I'm not trying to make judgments about what it's going to do. Like trying to sit down and say, there's this one thing and I got this one situation and that's my signal to go, I think is just kind of like silly. Like none of those things are predictive enough for you to be really trying to put risk on, right? But what I can do is I can say, well, I know that they're going to be selling it today. And what am I seeing? Oh, it looks like they're going to go for the lows, right? Like all the tea leaves and everything kind of suggests that now I can jump on it. Because what I'm seeing from the market is in line with what I'm expecting, right? True, we stick to our values here. We might be rude, but get what you... No, it's just, you're just the rude one, no. Or actually, we're not so rude anymore. I do like to keep a little bit of a gatekeepy sort of community. Like, I don't, you know, if somebody's going to come in and they're really certain about their technical analysis, I don't want them here, you know? I think someone who thinks in terms of econometrics and statistics will be inclined to order books. Yeah, well, so the thing you just got to remember is like there are stylized behaviors of order flow, right? And I have a video about that. There's like 5 major things that you can look at, but those stylized behaviors do not say when the X setup happens, we're likely to reverse, right? The things that we can actually prove are much more limited than that, and often while we can prove something, those things usually don't give us a direction. In fact, the things that we can prove really kind of suggest that it's just not going to move as much from then, right? So it kind of ends up helping you get out of a trade, but it doesn't necessarily help you predict what the next big opportunity is going to be, right? So it's like, you know, people try and create this whole thing because what they've been told since the 80s, since they were born, you know, our whole lives, is look at all of these people on the stock market making all of this money. All they do is they look at this chart and read the chart and then predict what's going to happen and make money. And like, that's not really what they were doing. And the people that were making money like purely off of the technicals, it's like they've kind of already arbitraged that out of the market. So that opportunity is not there anymore, you know? And so we're all trying to look for something where it's like, okay, yeah, maybe if you look at an iceberg that's this big and like, what's the outcome? Maybe it reverses like 52% of the time. 2%'s not enough for you, man. You need more edge than that to really be consistent. You know, once you start to understand, especially the fat-tailed nature of markets, you kind of realize that all of these sorts of things that people are looking at and think are a big deal don't mean anything. A 52% edge, like a 2% edge, is nothing in a market where, you know, you could have one data sample that just completely is worth more than all of the other trading that you did combined, you know? That's where I think that the style of trading that we're doing here can really stand out. Is that, you know, if there really is a good reason for this to move, and it's really going to move far, then you should have a better chance of being able to catch it, right? And so you can catch those far right tails. I don't get it. So order books have some, yes. Okay, so I think I kind of lost the plot there. The things that you can prove about the order book that you would be able to like make money from, like explicitly make money from, on their own are things that you have to be very, very fast to take advantage of. Okay. So you kind of come to this next tier of stylized behaviors that are more widely known that can certainly inform your trading, but they don't explicitly tell you get in here and it's likely to go this way and it's likely to go this far, right? But those things can inform your trading. They can tell you now is not a very good time to trade. You might want to, it can help you time it, know when the next market order is likely to come in. It can, but then more broadly, it helps you understand the way that the market works so that you can kind of make an actual correct interpretation of what's going on in the market and what's likely to happen, right? That's why, like, so because we understand the way that you know, the reason that trends happen is because of meta orders. That's one of the big takeaways, right? So that's the theory. But the reason that that's the theory is because the other theories for why trends happen, they try and like model those dynamics, and they don't account for all of the stylized behaviors that we see. But the large meta orders does, right? So now that we have a correct understanding of markets, we understand that it's those large meta orders, and we're trying to front run those large meta orders. Now we can come in and we can say, oh, well, how many people actually need to sell today off of this? Well, I think there's going to maybe be 50,000 net contracts. And we had one wave that was 20,000 and one wave that was about 10,000. And then this latest wave down has been maybe another 10,000. Oh, and by the way, the dollar keeps rising this whole time, right? But it gives me a good way to kind of estimate when the trend is actually done, right? When I reach a certain amount of change in cumulative delta, right? Now you get something that's really useful, right? But that all comes from combining a sound understanding of the markets, understanding what's going on with the order book, having lots of experience, knowing what the current economic situation is and everything else, you know, like little edge here and here and here and all of these different subjects. And then you combine them all together and it all fits together and it's in a coherent thing. That's the other thing. It's like when you're combining edges, it's not like, I think a lot of people think of it as like, well, you get this tiny little edge and then this, and they have nothing to do with each other, right? But what's really happening is you catch all of these things together. Now you can kind of understand why the system as a whole does what it does, right? So this is not stopped. So that was kind of like what I was saying. I was like, well, they're already forming another large amount here. That kind of made me think it's just going to keep going. And it has. Like, look, there's a lot. As 10,000 is traded at almost every one of these prices, it's not stopping, right? This is very, and like I said at the beginning, there's a very good probability that today is a trend day. Even if it's not like a pure trend day, I mean, clearly today was a trend day. This is just not stopped. Like since this one here, like you might have thought it would be easy to think, oh, it's dead now, it's not going to do anything, right? But that was just the beginning of the fun, wasn't it? Okay, well, where are we relative to like some other days? Like, let's pull up our volume profile and stuff now. Okay. Well, so like I said, there was a CPI over here, which was when we kind of came back below 3.9. It looks like we're kind of headed towards the 4% area. So we're in an area of where there's been a little bit of back and forth in the past. So it seems to me, when I come back over here, that liquidity is still pretty healthy. If your first axiom is that the market has a fractal nature, okay, so no. Oh man. This is, you like just opened up like a whole can of worms with that one, okay? So the market is fractal in nature. I don't think that people correctly understand what that means. So what actually is a fractal, right? Well, let's see here. What is Okay, so the Mandelbrot set is from the equation z of n plus 1 equals z of n squared plus c. Okay. So what you're doing is you're taking the result of the previous result and you're putting it in as your input for the current one. Okay. So a more simple way of looking at it is we have a box. Here's our function. Here's our output. That output is then put back into our input for the next round. Okay. So like a recursive function. That's what makes an equation fractal. Okay. It just so happens that when you get fractals, that you tend to get these kind of bizarre repeating patterns where you look at it and then you zoom in. It's the same pattern. It's the same for the markets. It's the same zigzag. Okay. Now, okay. So is a fractal function deterministic? It is. Okay, but the problem is that the equation that you're looking at is like way too complicated for you to be able to determine what it is, right? Because what you're doing is you have this guy and this guy and this guy, and this guy is maybe a CTA, and this guy is maybe retail, and this guy is a hedge fund, and this guy is an index fund, right? And they're taking in all of this information, fundamentals, current price, politics, all of this different information that comes from all of these different places, right? And then they submit their orders into the markets, okay? Now, what happens at the exchange is deterministic. You place the orders in there, it will come out the same way every time because there is a specific algorithm. We know exactly how it matches and everything that determines how things go on in the exchange. And so what we're doing is we're trying to predict this right here. We're trying to predict these orders. But how do we predict these orders? By looking at these different players and the data that they're getting and trying to come up with a judgment about what will happen in each one of these little functions here to determine what the orders that they will send is in, right? And then what do you get out? You get out a price that goes back out, and that's the recursive part of it. So it is a recursive function, but it's such a complicated recursive function to start with that you really can't exactly calculate it. Oh, and by the way, these functions are constantly changing too, by the way, right? Okay. First, that's for your first problem. But then the other problem is that if I, going back to the Mandelbrot set, if I do z of n plus 1 is equal to z of n squared plus c, okay? So then what is z of 1 million? Okay, how do you calculate that? It seems feasible that there might be some way to convert this function into something else so that I can put z into this new function and it will just calculate it to me in constant time, right? But nobody's ever discovered that. The only way to know what the z of 1 million is to know what the z of 999,999, and the only way to know that is, to know 999,998 and so on. So you have to do basically 1 million calculations to find out what the z of 1 million is. right? And so the result of that is that while it is quote unquote deterministic, it is basically impossible to predict. Or we have no known way of predicting fractals. It's like you come into the Mandelbrot set, right? Here, let's see here, Mandelbrot Explorer. If I come in here and I look at it and I say, okay, so I can come in and I can look at this little spot and I can say, okay, there tends to be these branches where it's like it goes it goes along the Fibonacci numbers, right? It's gonna be 1, 2, 3, 5, 8, 13, etc., right? But then, like, what is the picture? Okay, so I zoom in, and now I know that this picture is gonna look like the original picture to begin with, right? But then if I come into here and I look at this spot right in here, what is this gonna look like? Well, this looks like something completely different. It looks like something. So if I zoom in on this, what is that gonna look like? Can you predict it? There's no way. I mean, it seems like you should be able to predict it. It seems like you should be able to predict it, but it just gets like weirder and weirder and weirder. I was hoping to get into one of these spots where you just get like absolutely crazy colors and stuff. Maybe if I can get a little bit more on center. Oh, is that as far as it'll let me go? Yeah. Anyways, you know? So that's the problem with fractals, right? So you can think of technical analysis as kind of like that. It's like trying to predict a fractal. Well, it's kind of random. But I tell you, what's something that like really determines like what the fractal will look like is like what the original input was, right? And what are the original inputs? Well, it's all of those. Oh, I wish I hadn't erased the picture, right? But it's all of those. It's all that economic data and everything that all of those individual players are getting, right? That's kind of what sets the stage, right? So it's that ZN plus C. Like what you put in for that C matters a lot. Let's see here. Well, I did that. They're down another 2 ticks. Jeez. Yeah, it really was quite the session, isn't it, Lucas? I'd be 0-2 sitting at a loss of 6-6, most likely trying to get long. I might be seeing things when they aren't there. Well, this is like I was saying, like what I saw at 16 was a lot of volume traded there because it's 16. So remember that because these are divided into 30 seconds, 16 is basically half of a handle. So you'll always see something kind of funky happen at 16, right? But my overarching thesis was that you're just going to see the market orders are just going to keep coming. Right. And so while you're definitely going to see some spots where it's kind of build out some volume and it's going to mean revert a little bit, ultimately it's just going to keep going. Right. Now, we are to the point where I feel like we've kind of been like this the whole time, is that the market is kind of unhinged. So what do I mean by that? Well, so what I would normally want to see is the market comes down, we hit the square root law, it backs off, do it again, comes back, we do it again. This one will be a little bit smaller, comes back, this one's a little bit smaller. Oops. Okay, usually that's 1, 2, 3. Okay, usually 3 is the most that you're gonna get. Okay, so now let's go back and look at the market and see. Is that what the market looks like? Well, so there was this thing, and then it pulled back, and then this, and it pulled back. Here, it didn't make a new low. Okay, but then after that, what's this? It just keeps going, it just keeps going, it just keeps going. So what we have run into is normally somebody executing a meta order, they're going to create that liquidity hole, and then they're going to back off and try and let the liquidity kind of recover and so on and so forth, right? But what's happening in this situation is there are so many people out there that have to sell this that they just can't afford to wait. They just have to hit it. They just have to hit it and take what liquidity is there. And so it doesn't wait. So when I see something like I was pointing out, I think it was here and here, right? When it was like, there was a really clear node in this area. And then there was a really clear node in this area. But it was like those only lasted for 10 minutes. That's like a big red flag to me that like, this is not going to stop. That it is into an unhinged market, right? Or another way of putting it is there's like the square root law, right? But there's a certain point at which the number of orders is too much and it just breaks the market. And we've probably reached that point. They're not waiting, right? So that makes it hard because in that situation, I just have no way of knowing how many orders are ultimately going to come out. Especially since, like, coming back to this chart, cumulative delta has not been consistently down. I mean, like, there's been like that, but it's been pretty floppy. So it's kind of been hard to sort it out from that side, right? So where it goes, I have no clue. It will almost always end up being much further than I anticipate. Is this common behavior on this type of a market? Well, so what you are seeing is classic trend day behavior. Yeah. So what you're experiencing, Wealth Talk, is the exact thing where I'm trying to warn people against, is that a lot of people will have these kinds of setups where it seems like most of the time it comes back. And it may well be true that is the case, but when it's not doing that, there is so much more to be made when it's not doing that than when it is doing that, right? This is a tail event, essentially. So very classic behavior for a tail event, yes. But tail events themselves are not very common, right? They're like one in every, maybe one every 2 weeks or something like that. And I have to say, one where it's like this clear of a pressure, those are very unusual indeed. There's maybe only a handful of days in a year that are like this. Looks like uncontrolled I'm not familiar with that term, to be honest with you. This is exactly the problem with technical analysis, is you conceive it the way that you want to. Yeah, well, and again, like, it's the predictive part of it that's kind of like, right? Because I don't think I can come in here and say, based off of what we've seen now, okay, we've pulled back a little bit, we've pulled back 5 ticks, that's going to be the low of the day. It could be. We traded a lot at 10.5, by the way. 26, that's not the point of control, but they traded a lot there. I wouldn't be surprised if that becomes the point of control. But can I predict that that's going to be the low of the day? No, I can't. But what I can do is I can, using the rules that we have, we can explain what was happening here, right? Like, we know, based on what we know about the market and the research and everything, there's a large meta order going on and it's pushing the market. It's pushing the market down a ton. I should be able to explain here are the flows, what flows we're moving it. Like, I should be able to explain those sorts of things. Technical analysis can never explain that. They just say, well, it moved and we don't know why and we don't necessarily care. right? But then you can say like, okay, but if it's like predictive, you should be able to make actually good predictions, and they can't. Like their best setups are like 52% versus 48% loser. That's not beyond like the statistical level required to prove that you actually got something, you know? Now, though, the Elliott wave thing, this is another thing that I think is kind of interesting, is that a lot of the technical analysis stuff that you get taught in technical analysis does have kind of something to it, right? Because, as you guys correctly identified, when I say it does this and it does this, okay, like the classic chart pattern is going to be like this. And guess what? That's Elliott waves, right? They say there's going to be move 1, 2, 3, and then that's going to be the end, right? Okay, well, I think the reason that it tends to be 3s is that that's just like the amount that it takes, you know, to trade what you can in a day, right? It's just kind of a coincidence, and I would not look at it as like, oh, well, we've only had 1, so there's going to be a 2 and a 3. You don't know that, okay? Sometimes it's just 1, but usually it's not more than 3. Usually it's not more than 3, because if it's more than 3, then they hold off and that, you know, they give it the rest of the day to recover, and then they come back in the next day and do it again, right? Which is also a big one that people miss that we should warn about today, right? Well, tomorrow is a Friday, so that makes it kind of weird. So let's try and game out tomorrow, because it's time for me to go, and I will like completely lost track of time. Yeah. But that's the thing, is when you're only doing retrospective analysis, I guess let me try and take another hit at that, right? If I come back and I look at that chart and I'm doing the retrospective analysis, why did the chart move the way that it did? If we have the same set of facts, that is, like, we know about the same economic numbers and things like that, we should be able to give the same analysis, right? It shouldn't really be very subjective. We should be able to say, okay, here was a move and here was a move, you know, an imbalance in orders and what, you know, you're going to see a changing cumulative delta when it comes along with it, right? So you can say, here's a move and here's a move, and here are the things that were going on at the time. So here are my theories on what was driving that flow. There might be a couple of different things moving it, but sometimes it's just really clear what they are, right? And if we have the same facts, we should be able to say the same thing, the same analysis, right? Because there are actual rules to the liquidity and why it moves the way that it does, right? But it's not technical analysis, because I'm not trying to use the past price movement to predict what the future price movement is going to be. Ultimately, I think it's going to sell because I know the fundamentals are going to drive people to sell, right? So I can take advantage of the technical analysis, guys. I can come in here and I can say, well, I know that there's some people that are going to want to go long at 16 because a lot traded there, it pulled back a little bit, but I know based on the fundamentals that we should see a net change in cumulative delta of this much, and we are not even, you know, totally not done with, right? So I can totally take advantage of those guys and use their flow to sell into it and get a better price. 100% do it. I still follow a lot of technical analysis, and a major part of that is, like, whatever the popular thing is, I look for a situation where I see that popular thing and I know it's wrong. They say it's going to reverse here, and I know it's not going to reverse here, and I hit. Those are my best winners. Okay, so we were going to say, what's tomorrow? Core PCE. Gotcha. So I think core PCE should probably come in line with the forecast at spot 2, and then it will not be too much. There is personal income and personal spending, though, which they're expecting to come in at 0.5 and 0.4, which is pretty hot. Because it's a Friday, you will see a lot of like position closing and things like that. But I think that what you're seeing here today is probably not a one-day move. So we should be on the lookout for more selling flows tomorrow. So I think a lot of people will kind of assume because it went so far today, tomorrow you're going to get the mean reversion sort of a thing. And then they're all kind of caught off guard when you get like 2 or 3 days in a row of heavy selling. Well, it's because of the meta orders, right? You got to know why are people selling? How much are they going to have to actually sell? This is a situation where they probably can't do it all in a day. Okay. I'll see you guys tomorrow. Stay excellent.